Hello and welcome back to today's episode of my YouTube lesson. In today's lesson, I'll be teaching you something different from what I've been teaching on my YouTube channel. So I took some losses on gold on the 11th of January and I've decided to share that with you so that you also learn from my mistake, because I have already learned from my mistake and I wouldn't repeat that again. So follow me throughout this video today and I promise you will learn something new. Now, if you're not part of my Telegram channel, I'll leave the link in the description below. Click on the link and join the Telegram channel, because that is where all the magic happens. Let's go. Alright, so this is us on gold 4-hour time frame. And if you're someone who watches my video a lot or follows me for some time now, I always say this, that I love doing my analysis on the 4-hour time frame. This is because the 4-hour is not higher time frame, neither a smaller time frame, and the 4-hour also gives you a clearer structure. That is why I love doing most of my analysis on the 4-hour. And sometimes when I get an entry opportunity on the 4-hour, I enter directly, or I move to the 1 hour. I don't really play around the smaller time frame like 30 minutes, 15 minutes and the rest, unless of course I have something special I want to do on the smaller time frame. That is when I move to the smaller time frame. But I love playing around the 4-hour and the 1 hour, especially the 4-hour. Now let's look at something here. This is the 4-hour time frame and it's already giving me a clear structure. So this is the 4-hour time frame, and when you see, you can realize that price is moving in an uptrend. Now we have seen the structure, we've seen the structure, and we already know what we are looking at. Looking at this structure, this should tell you that price is definitely coming back to this. Price is definitely coming back to this area, and then we will have a reversal, or price will come to this area. This where our demand zone is. This is our demand zone at this point. So price will surely come to this demand zone. If I'm going to continue selling this asset, then I would have to wait for this major zone to break, then I can continue selling. Aside that, I'll be looking at buying this commodity from here when price taps into the demand zone. So is either price will get to this trend line and continue buying, or price will get to this demand zone and leave a wick to the upside and continue buying. So that is the two things I'm targeting. That is what I am looking at. That is where I want to sell to. And when you look at this side too, you can see that we have a supply zone. We have a supply zone here that price is reacting to. Why did I say that? Because I can see the big boys reference points such as imbalances, break of structure and the rest. So that is why price is reacting to this point over here. Now I have already taught how you can trade like the big boys, the big bands in one of my videos, so you can check that out. So you can see that price is reacting nicely to this point. That's why we had a reversal from the supply. So the next point is price to get here or get to this point, and we would have a turning point. So now someone will also ask why I am using this point as my demand zone. This is because liquidity has been picked at the downside here. You can see this candle has picked liquidity here. We had an explosive move to the upside. We have some imbalances in between. That is, if we move to the 1-hour time frame, you can see it between 3 candles, and we also have a break of structure with other reference point, with other smart money or this big boys reference point. Now let's look at what happened. You know, this is the supply zone. So after the supply zone was mitigated, I missed the entry. Like I told you, I missed the entry, and we also have price losing its momentum towards the downside from here. So when I draw this trend line here, you can see that price has started losing its momentum towards the downside. So after this candle, I can equally enter, but then I was not online. I was doing something else because we had an engulfing candle. We have an engulfing candle here. This candle, this is candlestick pattern. This candlestick has engulfed this one on this trend line, so I could have equally entered from here. But since I missed that entry too, I was waiting for price to break this current. So I have different ways I enter the market. Okay, that is, if I miss another opportunity, I look for other opportunity when I have a target, maybe to the downside or to the upside, because I already know where my take profit is. I told you earlier that I am either looking at this point or this point, so mine is just to look for my entry. So I was waiting for this current resistance break, this resistance, this support here. I was waiting for this support to break for me to take an entry, because price can just get here and anything could happen. This is a very strong support zone, because this is 4-hour time frame. When we move lower, you realize that this is a very strong support zone. So you can see that on the support zone, price has been rejecting the support. We had this rejection, we had this rejection, we had this rejection, we had this rejection. This is telling us that price can still move up from here. So I was just waiting for price to break this current support zone so that I can now confidently take my entry. Now look at what happened. This is the candle that has broken the support zone. This is the candle, this candle. You can see that the candle body has closed below this support zone. This is my support zone, not here, because this one has been rejecting it. So I was waiting for this support zone to break for me to enter. Now immediately price broke the support zone, I entered confidently. So I entered, I just put out my short position to enter from this candle and my stop loss just at the high here. Okay, because I know we are already moving in a downtrend, so my stop loss just at the high here and my take profit to this point. So this is where I'll be taking my first take profit, and my second take profit will be to this point. So this is my first take profit and my second take profit. Okay, so why did I put my stop loss here is because I don't want to risk much, and also I have seen this happen over and over again, especially when I'm using a current resistance or support break. Immediately there's a current resistance or support break, the next candle that will form would be a huge candle. So if it is selling, to be a huge seller candle or bearish candle, and if it's a buy, to be a huge bearish candle, to be a huge bullish candle. That is if it is buying. So I already knew that the next candle that will form will be a very huge bearish candle. That is why my stop loss is here, because I didn't want to risk too much. Now on that same day, we also had a news that was coming up, a CPI news that was coming up, and you know, most of the time the news moves with the structure. That is how it plays out. Most of the time the news moves with what the market structure is telling us. Now when it comes to trading, we have different ways people trade. We have people who trade only fundamental, and most of these people are position traders, because anytime a news is released, it gives us the future idea, or it gives us what is going to happen in the future. That is why you hear most traders saying that it's not advisable to trade when a news is released because of the spike. Those spikes are just for some minutes. It can be 100 pips, it can be 150 pips. So you can equally allow that spikes to go and then enter after market or after price starts correcting itself. Now, like I said, we have types of traders. We have sentimental traders, fundamental traders, and technical traders. So technical analysis, they are basically using charts to do analysis on historical price based on structure, whilst fundamental analysis is the method of forecasting on future price movement of a financial instrument based on economic, political, and other relevant factors that will affect the basic supply and demand of whatever underlies the financial instrument. Example of this news can be NFP, FOMC, CPI, GDP, PPI, and so on. I've already taught how to trade news on one of my YouTube videos, so you can also check that out. I already talked about all this, how the news comes up, how the news is supposed to be traded, and other stuff, so you can check that out. And as a forex trader, it is very important to have an idea about what fundamental analysis is. The reason why I'm saying that is because once you are a trader, you are directly trading one economy against another. So if you are trading USD JPY, you are trading the USD against the Japanese yen. So you are trading the economy of the USD against the economy of the Japan. So you have to have a fair idea about what these economists are saying. Now, this news can be found on investing.com, FSG, Forex Factory, and so on. The one I thought is on investing.com, so you can check that out. Now, when this happened, I confidently knew that the news most of the time, or 85% or 90% move is structure. So I was confident that this sell was definitely going to take place, even if the news is released. So I was still waiting for my take profit to get triggered. Now let me show you what happened. Now, before the news was released, this is what happened. You can see that price is moving nicely, right? Price is moving nicely to my take profit. Then eventually, few minutes after the news would be released, we had this candle pulling up to the top, this huge candle, pulling up to the top, back to where my trend line is. Now, this is because we have some orders that are left here by the big boys. This is a supply zone now. This now becomes a supply zone, and the supply zone is on the trend line. So you see how all these technical analyses are done, right? Supply and demand. If you trade supply and demand, you can equally make money. If you trade technical analysis, you can equally make money. So all these strategies work. Yours is just to stick to one and learn or practice how it works, and you can make money out of it. Now, this is a supply zone. This order is left behind, and market makers have to come back to fill that order before they continue selling. Okay, they need to balance this here because they've left some imbalances behind. They are in a loss, and they need to come back and fill that imbalance before they begin moving into their direction. So before the news was released, in few minutes, look at what happened. Price moved back to that same zone, to this zone, this supply zone, on the trend line before dropping. So this is where I was taking out. Price took me out from this point immediately. And now I think the mistake I also did here is that I should have put the stop loss a little above this high. But because I already had confidence that the next candle that will be formed after a break of previous support here or previous resistance will be a huge candle, I decided to enter with confidence, and then my stop loss was placed here. Because if I move to the lower time frame, you see that the stop loss is on a very good resistance zone. So I decided to place my stop loss here, and look, this is how price took me out, and I lost money. So what I have decided, or what I have told myself, is that anytime a news will be released, is either I stay off the market, allow the news to be released. After the news is released, then I can confidently enter the market. So I'll advise that if you are a beginner, do not trade when news is about to be released. Allow the news to be released and enter later, because this usually happens anytime there is a news and there are orders that are supposed to be filled. These big boys will fill those orders before moving in their own favor. That is why I was taking out at this point. You can see my stop loss was hit nicely, and then price started moving. Now look at what happened here. Look at here. You see price has gotten back to my zone where I targeted. This is our previous support or resistance. This is our trend line, and you see price has moved straight down into my targeted area, even though I was taking out. So anytime a news is going to be released, or any of these high impact news will be released, if you have some orders, then you need to close the orders and allow the news to be released before you enter your trade again. Or if you think you are very good in trading fundamental, anytime fundamental is about to be released, or anytime any high impact news is about to be released, you need to target where possible points where market makers can trigger before the news goes into their favor. So you can, like I said, this is a supply zone. I didn't pay attention to this supply zone because I was still targeting this point and this point. I was still targeting this demand point. I was still targeting this support and resistance point, and I had a lot of confidence. So I didn't pay attention to this point. But look at what price did to me. Price came back, took me out. This is liquidity that is built here. Price came back, took me out, and look at the wick that is left. This long wick, you see. So this is what happened to me, and this is how I lost money on the 11th trading gold during CPI. I entered before the news though because my structure was right, but this is what happened to me. I hope you've learned something out of this video. If you did, hit on the thumbs up button, hit on that subscribe button, and also leave a comment below. Thank you for watching. See you in the next episode, and peace out.